the first objective for trading is not to make money. The first objective is to keep your money, because then you still can in the future make money. So it's more about not losing than winning, because the winning will come if you don't lose, because then you have more opportunities.
Welcome back to the CTI YouTube channel. Today we get to meet Reinier, who is our newest portfolio manager. You're not going to want to miss this, so watch until the end, because this interview is going to be packed full of wisdom. He's going to share some of his strategy, and we're going to look into his stats on how exactly he passed the evaluation. And trust me, the tips and the wisdom shared are going to be absolutely brilliant. So without further ado, make sure that you're smashing that like button, subscribe to this channel, and share this video with other traders who are looking to take on the CTI evaluation. And if you are interested in the CTI evaluation, use the link below for full information about the programs. Right, so let's get Reinier on here.
Welcome, Rodrigo, and thanks for the introduction. Yes, my name is Reinier van Housen. I live in the Netherlands, just south of Amsterdam. I've been trading on and off like 5 years, and I started like with other ways to make more money on the internet. You see just promos with guys in private jets, big cars, big houses, and you're wondering, well, my salary, that doesn't work out, so they're doing something different. And in that way, you start involved in like trading robots, the gambling, roulette, martingale. And you try to figure out like what's working, what's not working. And on the way, you learn a lot. And finally, I find a good mentor that pushed me to get past the CTI challenge. And I'm a portfolio manager with CTI. Thanks to that.
Fantastic. So it sounds like you learned what not to do.
Yeah, you have to unlearn a lot. And you figure out a lot of things that look nice but don't work. I mean, if you think about it, I never heard about martingale. Martingale is like if you lose, you double your bet to make money. And if you check it out on roulette, you have like red and black, and you think, okay, if I got 3 times black, then there's a bigger chance the next one will be red. So I gamble on red. But basically every time there's a chance of 50%. And at the end, you double to make more money. So if you lose 1, you bet 2, then you win 2, and that compensates for the 1 loss. So at the end, whatever the bet is, you only win 1. So you can bet like 500 to make 1. So like a risk reward for not 500 to 1 to 500. So that really doesn't make sense at all. But you have to figure it out that that's not working.
I think with trading, the variables are a lot different. I think you're more likely to find success on a roulette table doing the martingale than it is with trading.
Yeah, absolutely. And you have more control over your every time. It's a guess, like will it win or lose, or you never know the outcome. But you can check for higher probabilities, and that results like a success rate of 75 to 80% for me on my trades with just 1-to-1, and that's good enough to make nice profits.
Yeah. So how long was that journey for you until you started reaching some consistency?
Yeah, it took 5 years, I think. Yes.
Okay, that's a really good.
Successful, but also like my mentor helped a lot, and my trading buddy helped a lot to get to really to the next level. You're bouncing on break even a lot of the time. And then you have to make the next step to find your last error, mistakes, or improvements, whatever you virtually.
Yeah. I remember clearly that break-even sort of journey where it can last months. In fact, it can last years. I remember my one lasted for almost 2 years, just kind of going break-even. And that's when I discovered the power of journaling. And when I started applying all of my trades, recording everything in detail, it was only then that I could find the reasons why I was winning and the reasons why I was losing. And so, it's so important to be able to tap into your journal, tap into your own history, because that's where you find the gems.
Yeah, and then you have to learn from your mistakes. But to identify your mistakes, you must be able to see what's that. And then also, like every weekend, I review my winning trades, but even more my losing trades, because am I winning? Is that luck or is that following the process? And if I lose a trade, but it followed all the steps and all the checks that I have, then it still can happen and still a good trade. But if a winning trade can still be a bad trade because you just gambled and did not follow all your steps. So it's not the outcome, but like the steps to the entry that define a good trade or not. If
Exactly.
You follow steps
So what part of your process did you introduce that gave you that consistency that you're seeing now?
By trading with the trend, but based on higher time frames and entry on lower time frames. So I define on the higher time frames the trend, and then like 4 hour daily, weekly, even monthly. But my entries are on the 1 hour, and on indices the entries are on like on the 15 minutes. But the trading system is always the same. But I don't check that. I trade with the higher time frame trend with entries on the lower time frame with the trend. So I don't trade the pullbacks against the trend. So I have a higher success rate because there's more chance that the long trend will continue. Then a pullback will suddenly become like a trend reversal. That's more or less likely. And by changing that was the trigger that gave me the success.
Was there anything else in your process apart from that trade execution process? Was there anything else outside of that?
Yeah, and also trade plan, like one trade in a time. If it's break even, then I only open a next trade. So I'm always limited my risk. And being more in the market does not mean more profit. Good trades mean more profit, and not more trades mean more profit. And I think that's also something that when you're new to trading, you think like, if I can make with 10 trades, I can make 1,000. Then with 100 trades, I can make 10,000. But you cannot find 100 good trades in the same period that you have 10 good trades. So then you're just or over trading or gambling, and being more in the market is also more risk. So it's like identify the best setups and go from there. And I like really to go for like a small risk reward. I trade with a trend. 1-to-1 is perfectly fine for me. And if I get to my monthly goal, then I reduce my risk. And then I just go to break even and let them run. And then that's just like kind of bonus money with limited risk. So in that way, you can still increase your profits without giving back your profits, what you see many times. So you have nice profit, and then you continue trading, and then you lose it all at the end. And that's not what you want to do.
Exactly. So I really like that, where in the beginning of the month, you work towards a target. Once that is hit, then you lower the risk, but you let them run a little bit longer. That's really interesting. It's the first time I've heard a risk management technique like that.
Yeah, I mean, it's like if you reduce your risk, you just go to break even. And if they hit break even, I mean, you lose nothing. And if you're lucky, you get some positive swap. So you have to take care of which direction is the swap, and is positive or negative. And especially for Wednesdays, then most times it's like triple swap. So you want to have keep a look on that. But yeah, swap is like the overnight fee that you pay for trading. So you want to keep an eye on that. So if you are break even and your swap is negative, then at the end you still might lose money. So then you want to add your stop loss every day, so at least you cover your swap as well, that it still comes break even and not a small loss even. And in that way, you can just manage them and let them run basically and see what's happening. Just trail your stop on the price action and go from there.
Fantastic. Well, thank you for sharing that. That's for all those listening. If you're looking for a risk management strategy, that was definitely a really, really insightful and powerful one. In fact, we can actually see a little bit about that. We see that strategy over on your statistics. Let's see what that looks like. Let's see if we can add on. Yeah, here we go. So if we start scrolling down, we'll be able to see how you managed. If you could talk us through some of your trades that you took in terms of winning and losing, break evens.
Yeah, like you see, like I have here a couple of break evens, which is perfectly fine because you don't lose money on the break even. And the first objective for trading is not to make money. The first objective is to keep your money, because then you still can in the future make money. So it's more about not losing than winning, because the winning will come if you don't lose, because then you have more opportunities. So
Exactly. So capital preservation is number one.
capital preservation is number one. And as long as you have capital, there are new opportunities, but then you still need to have the capital to be able to use that, basically. And so what you see is like my losses are like 50, but my winners are much larger. And you see also my lot sizes depends a lot, because I just use a risk management EA. So I just said my stop loss is 20 pips or my stop loss is 30 pips, depending on the price setup.
Mm.
And then it calculates the lot size based on that.
Nice. Is that the CTI one?
Yeah, the CTI one, yes. So
Great. If anyone wants interested in that CTI tool, then you can have a look at this video to see how it works, and use a link in the description below to download it. But it's essentially, you just join the Discord community and you'll have the tools ready for you guys.
So yeah, you see like the losses are small and the profits are larger. And in that way, it's good to have like a decent profit. And you see that also, like if you take like the graph with it, I mean, it's just going nicely smooth up. And you have some pullbacks and some flat areas. Flat areas is just a couple of break evens. And I think like from 130, trade 125, 130, something like that, I got to the profit target area. So then I reduced my risk with cap trading. So still moved up a little bit, moved down a little bit, and some sideways. But
Okay, fantastic. This is very, very impressive.
So, but you see, like there is no really big drop downs. I mean, it's like here's one trade that was really a loss, and here's some small ones, and here you had like one or two in a row that lost. But it's mine, and here you have a couple of winners, and then it immediately compensates for the here you have two losses, and you have like three winners, and you still your three winners are like double the amount as your two losses. So in that way, it's easy to compensate if you have a loss, and then you get like these nice graphs showing your account balance.
Exactly. So let's scroll down all the way to your statistics. Let's see what your stats are saying. Because so far it looks very impressive. Here we go.
Here we got the statistics. So as I said in the introduction, like about 80%. Okay, I won 77 of the shorts and 76 of the longs. So that's about my normal target on my win rate.
Yeah, well, the win rate, it shows here as in 77.42%. It's one of the highest. One of the highest I've seen as a CTI value on a CTI evaluation. And you had quite a strong winning streak, and not much of a losing streak. Is that quite normal for you not to have a losing streak, or?
Yeah, because I go quite quickly to break even. And if I see like on the price action that it reverse, I'm okay with closing it with a small loss, because there's always new opportunities, and the more capital you have, the better your next trade will be. The more money you have to trade with it, basically, as you use percentage-based risk and not like a fixed lot size. So if you lose $100 or $200 on a loss, then your capital will go down. And then the next trade, you need more. Like if you have like 100% your full account and you lose 1%, then you have 99. But then the next trade, you win 1%, your next 1% will not compensate, get to 100. That will bring you to 99.9. Because you take 1% of 99 and not 1% of the 100. So you always need more to recover your losses. It's like if you lose 50% of an account, you need to make 100% to get to break even back again. So it's always good to cut your losses short and let your winners run. And if you're in a winning streak and you got some nice profits, that's when you make the money.
Exactly. So if So those times when you, no, well, the question is, how do you maintain your mental capital? How do you maintain good and strong mindset, like a growth mindset? How do you do that? How do you implement trading psychology into your trading?
One of the things is like if you have too many winners in a row, then you just stop trading for the day because you got overconfident. Then you think like, okay, I can beat the whole world and I know what the market is doing. So stop after a few. Everybody knows like if you have a few losses, then they say like, okay, the market is against me, so I will stop trading and try again tomorrow. But if you have some winners in a row, especially if they're really nice ones, then you get overconfident as well. And so then it's better to just stop and walk away. I mean, the profit is there, and just go back the next day with a new, clear, relaxed mindset. And then the good feeling, like the adrenaline of the winning, is gone then. So then you are clear again for new setups.
Fantastic, fantastic. And what about for traders who are currently learning a strategy? I mean, what tips will you give them when they're part of that learning process?
I really would focus on one strategy, and whatever that can be. It can be like order blocks, smart money concept, trade with a trend, whatever your strategy is. That doesn't really matter, but really like try to focus on one strategy, because your mind is very smart. I always compare it like if you're expecting of a child, or with your wife together, you're expecting a baby. Suddenly you see strollers everywhere. If you're looking for a new car and you're really into BMW, for example, it looks like the only car on the street is BMW. Is that because there's suddenly more BMWs? No, it's because your mind will trigger you because it knows you're interested in that. It will make you aware of that. And if you have a certain setup that you're looking for and it's only one type of setup, then it's much more easy to identify them because you're always looking for the same thing. And if you're using three completely different strategies, then your mind does not know what's the important part that you're looking for. And therefore you will miss up a lot of setups.
Yeah,
And
yeah,
just by always focusing, I'm looking for one specific thing only. And I can see them I know exactly what to look for, and it really triggers me to see them very easy. And I was looking, I've like a high success rate, but my risk reward is quite low, quite low. It's like most is 1-to-1, 1-to-2, and I'm lucky like 1-to-3. And I was looking for like, can I find a trading system to get my higher risk reward? And by looking for that, I was looking for like smart money blocks or smart order blocks, things like that. And
mm-hmm.
and it really resulted that my normal trading was going down. My results were going down because I was focusing on two different setups. I mean, one setup is where I enter, would I exit with my other strategy? And it really confuses my mind. So I just thought, no, I should not do that. I mean, I have a good strategy. I have good numbers. Better can become better in what I can do than add something that negatively influences what I already know.
Fantastic. So powerful. Guys, please rewind that because there was so many gems there. And I think it's so important just to focus on that one thing, focus on that one setup. Really good wisdom there. Thank you for sharing. So if you could, I guess, speak to thousands of traders, the ones that are looking to become a funded trader to achieve financial freedom, what advice would you give them to become a portfolio manager with CTI?
Risk small, know your numbers before you start, and make sure you have consistency before you start. What I mean by that is like, I know my numbers. I know 80% is my rate. I know if I have a losing streak, it's maximum about 4 trades is maximum losing streak. So I know what I can risk in my trades because I know I have capital enough for 4 losing streaks in a row to survive the regulations that are there. And CTI has very fair and easy regulations to become a funded trader compared to some others, because you just have like the maximum loss on the account. And but really practice before you start and make sure that you know your numbers, know your success rate, know your risk to rewards. And when people overestimate the amount of success rate that is required, I mean, you don't need 90% success rate and 1 to 10 risk rewards on every trade to be successful. I mean, if you have a success rate of 55% with 1 to 1, you are better than 95% of the trades because you make money with that. The only thing is you should risk very small because you still have like 45% losses. So is your capital large enough to cover that amount of losses? And how many losses in a row do you have to be able to do that? But that is something you should know before you start and not figure out after you start.
Yeah, Reinier, I would like to once again congratulate you for passing the CTI evaluation. You are now one of our disciplined portfolio managers. I'm really looking forward to seeing your consistency, seeing you grow and scale up. And in fact, one of your colleagues I've interviewed recently as well, his name's Alex. So you guys can check out his interview here because you guys have worked very closely together. So hopefully we can in the future have a conversation together and discuss a little bit more about what makes a successful portfolio manager. Maybe we can discuss some of the mindset aspects of that. So guys, make sure that you subscribe to this channel, hit that bell notification so you don't miss out on this video, because these two guys are very professional traders, very consistent and disciplined. They know what they're talking about. So make sure you don't miss that video. So once again, thank you, Reinier, and good luck with your trading. And yeah, we'll catch up soon.
Yeah, thank you, Rodrigo. And looking forward to have like this three-way interview together with my trading buddy Alex. I learned a lot from him and he learned a lot from me, and we're working close together. And yeah, looking forward to share more knowledge to the community.
Awesome.